Hi, fellow traders. I hope everybody had a great start to their week, to their month, to the second quarter. For me, for us over here, it was a little bit slow this morning. I didn't even have a watch list. I had one stock that it popped up on there that looked okay, and then it fell off because it fell under that dollar threshold that I have. And never really had anything. We saw some stocks with not a whole lot of volume, like TWLO and Roku. They just didn't have a whole lot of volume, but they made huge moves. It was a little choppy. You could have easily been chopped out. But those aren't the trades I like to be in. I don't like to chop through a move because it's too easy. With the stock that doesn't have a whole lot of volume, that it can just run against you real quick and take you out, and then make a big move, and then it starts you to chase, and it gets in your head, and then your day is done. So we don't want to go that route. But I'll go through our day here in a minute. The message I want to share with you today, this is based on a conversation I had with someone who wanted to know about the community. They were asking me questions, and you guys know I'll talk to you. I don't have a problem getting on Skype or jumping on the phone and answering questions for you. But one of the things he wanted to ask was how people compared to one another. Is everybody kind of together as they go through their roadmap course, or are they all over the place? The reality is, you can't compare yourself, or you can't compare others with each other. But you don't compare yourself with others. You have to stay focused on your journey. If you insist on comparing yourself with others along the way, that's a battle that you're never going to win. Because what's going to happen is you're going to get mad, you're going to get upset, you're going to start to feel defeated if other people are, saying that they're this far ahead of you. But the reality is, there are always going to be people that are greater and lesser than you are. It doesn't matter. So trying to compare yourself to others, trying to find people that are lesser than you to make you feel good about what you're doing, or it just doesn't end well for you. So don't compare yourself with others. Focus on you. Focus on your journey. Focus on your equity curve. All right, and that kind of brings me to another issue here dealing with the equity curve, because in a mentoring session today, I had a trader show me this equity curve here on the left. He showed me his, and he's like, man, I'm just all over the place. I can't seem to get this thing smoothed out. And so I asked him to pull up a chart of the SPY. Pull up a chart of Apple and plot it, look at it on a daily chart. Now, does that look like your weekly P&L equity curve that you came up with? Yeah. Your equity curve is going to look like this because the market looks like this. We're trading the market. The market's going to give big one day. It's going to give little one day. It's going to take away one day. You can't gauge yourself on that. That's not what it's about. If you look at the right side, you're looking for your equity curve to continue to grow. And what you do is you keep adding every week. You add what you made to the total. It's just a running total. Or if you lost, you have to subtract. But whatever it is, you're wanting to add. As you go through this process, at the end of each week, you want to see yourself adding to your account. And if you're adding, your equity curve is going to go in the right direction. So don't worry about these numbers here, that's irrelevant. This could be 20, 40, 60, 80, 90, 100. It doesn't matter. When I first started, and I went back and I showed you guys my the records I downloaded back in 2015 or 2014. 2014. And when I started using Profitly, and you saw $8 days, $20 days, $40 days. I had some small days, but guess what my equity curve was doing? It was going up. And those days add up. You can thumb your nose at a $50 day, but when you grow your account and you're trading with twice the money, that's going to be, it could be a $500 day. It may not just be a $50 day because you're trading with small size. Everything is relative. So all you want to look at is the line. Don't worry about the numbers right now because we're growing. Before you know it, you will have grown and have grown out. Now the first quarter, we're done. You guys got to see every trade I took. If you were in chat, you got to see it live, happen real time. The winners, the losers, the screw ups. You guys were there for everything. We started January 1st with $5,000. That we made last year, starting with our $1,000 account. And in one quarter, we're right on the door of 15 grand. We're like, what, 14.5 or something like that? Right on the cusp of 15 grand. And we started January with 5 grand. We started February with 5 grand. We started March with 5 grand. And we started this morning. We started in April with 5 grand. We're starting every month. If I have another quarter like this, what will we be able to do? Now, if I have another 15 grand, that's 30 grand. We just worked our way out of Sure Trader pretty much in 6 months. Think about that. Think about how profound that is. When we started in January, we started really slow. Not every day was a banner day. But we took those big days. We took those small days. Everything, and you look at this equity curve, we started at 0, 5,000, and we just kept adding. Some weeks were slower than others. Some weeks we went backwards. Well, one week we went backwards. But our equity curve is growing. And that's what you want to focus on. That's how you determine whether you're getting better or not. If your execution still sucks, your equity curve is going to suck. If the stocks you pick suck, your equity curve is going to suck. If your mindset sucks, your equity curve is going to suck. So no matter what is going on in your trading, if it sucks, your equity curve is going to show that. And that's the only thing that you want to watch. Because when it starts going the wrong way, or it starts flattening out, then there's something you need to go back and start looking at. And you just look at one thing at a time. You don't overreact. You don't do anything. I'm trying to say, you don't overreact, but you don't do anything in excess. That's what I'm trying to say. So just make sure that if you're not gauging yourself on what other people are doing, you're not gauging yourself from trade to trade to trade, that you're looking at this in a long-term view, you're looking at this, weekly, and how much you're adding or not adding to your equity every week. But if you're not making consistent growth, then yeah, there's something wrong somewhere. It could be an execution problem, could be a trade planning problem. It could be a number of things. If you're not consistent, you may hit a big trade here and then systematically give all the money back and you end the week red. Whatever the case is, that's where that mentoring comes in. That mentoring you get with the roadmap to success. That's exactly what you want to use it for. Because you got to clean some things up. And that's what my whole idea was behind giving the mentoring time. And so that throughout this process, you guys have a sounding board, and I'm going to tell you what you need to hear. I'm not going to tell you what you want to hear. I'm going to tell you what you need to hear in order to get to the next level. So let's look at what we did today. IQ was that stock that was on my watch, on my scanner early. You can see, how we gapped up. We were up over $1 here, and then it pulled in. It took that dollar out, and it kind of disappeared from my scanner. But I still remembered it, from being on there. So I still had the chart up at the open. I didn't trade the initial 5-minute opening range. I wasn't sure. The market was just really, really sad this morning. It just had a dead feel to it. So I just kind of waited until I felt this thing can make make a move. And once we got down and we got through all of this mess, I got in here and I fully expected it to go back and retest at some point. But I didn't get in to add. I could have added to this, but that's not the market that I'm dealing with right now. So I got in, it bounced like I thought it may, and then it started to sell back off, but then it caught itself. It made a higher low, and this one, we just saw some incredible buying pressure coming in. So I figured, hey, I took it off before I hit my max loss. Only lost right at $62 on this, because I wasn't, if it's looking like it's going to go against me, there's no way I'm going to sit there and hold it and just be stubborn and let it hit my max loss when technically the trade broke down. And when we made a higher low here, the trade technically broke the setup. And, I was giving it one candle to see if it pushed up, and it rejected here. And then we started making lower lows. But this thing was just way too strong and, prompted me to take it off. And you can see this thing flagged out here and, popped higher and blew through all of the moving averages and stuff. So if I'd have been holding it, I'd have just hit my max loss, been down $150, and would have had that to work out of. In a day like today, when the volume wasn't there, the volatility wasn't there, it's hard to find really big moves. So that was IQ. All right, so now BIDU, this one was a reversal trade. And the way I found is normally we find these on our scan, but this one was a little bit higher price to hit my scan. I think I've still got the $150 max stock price on it. I really need to change that since, this year we're starting with a little bit larger account with $5,000. But, you can see here, I caught this on the news. Benzinga is what I listen to for the news. And you know, it mentioned BIDU and it was, you know, ripping up. So when I looked at it, it was trading outside of the VWAP deviation bands. Some people use the Bollinger Bands. They're a little bit different than the VWAP bands that we have on Thinkorswim, but it pretty much tells you the same thing. So it was trading outside of it. We had this nice parabolic move up, at least 4 candles, green candles in a row. So I started looking for a level of resistance for this to run into. And off the daily chart, I found this. This isn't the exact price, guys. I just, on here, I think it was, what, maybe 171.38, 39, somewhere in there. It's not the exact price. I'm just looking for a range. And because you got a 10-cent window between above and below the actual level. So it's kind of a range that we're looking at. And it looked like it was rejecting off of this. So I looked at the 2-minute chart. The 2-minute chart had, you know, enough candles making lower lows and lower highs that I had confidence, you know, I had conviction that this was coming in. It has not been, these have not been failing at the 9. You know, like we've seen in the past, they've been selling through it. So I fully expected this to sell through the 9 and hit the 20. That's why I didn't take profit here. So we hit the 20. I took half off here at the 20. And then as we started bouncing, you know, it didn't look like we were going to roll over. So once we got in here, I went ahead and took the rest of it off, you know, right around 170.23. Still, that was a 50-cent profit stop. So then I'm like at lunch, and we're in the middle of a mentor session, and I'm like, you know, we need to, you know, look at this. This is starting to bounce. So we are, you know, probably going to make another run up to the high day, or attempt to. So we got long here, and it just did not have that push. It just didn't have that push to, you know, get itself up to where it needed to be. It tried and it pulled back and it just kind of kept going. And this is the kind of action that you see at lunch. So what we were looking for is some buying pressure coming out of lunch to run it back up and test this level here. Well, it just seemed like it couldn't do it, but it was holding the 20 really good. And so I was really confident in that. But by this time, my patience was running out. And so instead of me waiting for it to get here, I went ahead and took profit right here, just below 171. It just seemed like it didn't want to go. And in my mind, I just assumed that we were going to get stuck here again. And I just wanted to grab some profit and clear my mind. That's what I did. And this thing ended up coming back and stopping me out. Not so much at break even. At break even. And I think I had a 170.60 stop. So I had 5 cent slippage on this, which is normal when a stock starts to wash out. You can expect, you know, 3 to 5, sometimes 7 cent slippage on this, which is acceptable to me. So we were done with this. Not that good of a show for the amount of work we put into it. 166.37, but this is typical of a day when you have very little volume, and you know, you can see through here we just lost volume, and everything we traded today was on low volume, just low volume, and this is what we get. So a lot of work for just 60 bucks. I know it doesn't make a whole lot of sense, but we have to trade the markets. We have to give these moves a chance. regardless. You know, if it sets up. Now, if it never set up, we don't trade it. But if it sets up, we got to give it a shot. That's what we traders do. We gave it a shot. You know, maybe on days like this, to days like today, just take everything off on the first target and then reset. I mean, that could have been an ideal thing, and I could have made some money there and, you know, got back in and just kind of hung on to it till we got, you know, a little bit better. I could have taken it all off here and been done. You know, it's something to think about on days where there's low volume, low volatility, very little chance of a lot of follow through. But that's a question that I have to pose to myself during that reflection process, and to see if, you know, do I want to change some things around for the next couple of weeks, you know, until earnings comes back around and just gives the market a kick in the butt. But, you know, nothing to write home about, but I'm okay because we're not red. I didn't force anything. I managed my risk. So everything I did according to plan. And on days like that, I could make $1,000 or $10 and be happy because I felt like I was as good as I could be in my execution. And that's what we have to strive to be. That's the one thing that we can be perfect in this industry. The one thing, and that's execution. You know, it's up to us to execute our trade plan. We can't blame anybody else or come up with any other excuse. It's completely up to us to execute our trade plan. And that's the one thing that we can strive for perfection in this trading. It's what we should do. All right, guys. So that's going to do it for me today. I hope you guys had a great day. Have a great rest of the day. Enjoy your evening, your night, or your morning, depending on where you are. And we will see you tomorrow.